Bitcoin, is it risk on? Is it a hedge against? Settle down, it's a lifeboat. You need to get in it now. Bitcoin, crypto, morning tea, hey. Good morning, everybody. My name's pianomattyb. That is Scaramucci's. This is your morning tea. A brief glimpse into the crypto markets where the sun's shining, where the winds blow. All the humble opinion of this piano Zamboni bringing the The FOMO index has remained at 79, frozen in a state of extreme greed. Bitcoin dominance is 52.3%. 24-hour volumes, 114 billion. The overall market cap, 2.49 trillion. Give or take 100 million. Well, the curse of the pre-halving dump hasn't quite memory-holed itself yet. She's not going down without a fight, rallying the bears back into place. But we talked about this, so it should have come as no surprise to anyone. This boutique community, when Bitcoin price action, well, she had a little dump, but more rejection from that level could lead to a bearish reversal and trend change down to lower levels. And when I say lower levels, I'm looking at that 67.4-ish level to rear its stinky bearish head. This bearish engulfing candle could continue to push price further to the downside, first being the 23.6% fib at 68.4, which is also the 20 moving average. But and I say if we break her, wouldn't surprise me to see a quick dip down to that 67.4-ish level. More bearish levels of concern are first down at the 20 moving average at 68.4, and then of course the 32.8% fib down at 66.1. Lord love a duck if she didn't do just that. After yesterday's dump down to 68.2, the market April fooled us straight back, laying in a bullish engulfing candle and stuffing us back into our channel of eternal monotony. But the joke was on the bulls, because when they fell asleep, the April Fool's bear snuck back in and price action dropped hard, crashing through the 200 moving average, 67.4, finding a bottom and a bounce at 65.8. It has pouted back to a time of production, 66.3, so we are currently under all three moving averages, which is generally a perfect bottom. And to put it into perspective, we haven't been underneath the 200 moving average since way back in February, when we were grasping at 42K and eternally grateful for the price increase. Now, 6 weeks later, we're underneath the 200 moving average, and we're cursing the gall of a 7% dip down to 66K. And of course, we can't forget about this cute little bear flag we're carving out. This price probability does play out too. 62.6-ish, and would take us underneath our current channel of eternal monotony. My heartbreakingly bullish outlook would be to see the sell-off correct, and we pump back up to our channel's resistance at 69.4, and this dump is memory hold as an April Fool's blip in the matrix. Now over on the ding dong, you can see we almost dumped back down into our old triangle of neutrality, which is also at the crux of the 38.2% fib. Now F. And I say if we see continued downward pressure, our next fib would be the 50% fib down at, oh snap, 62.6, which is where that cute little bear flag plays out to back on the 4-hour chart. So there's bearish double word score at that level. Now it's the humble opinion of this piano that our current channel we are now back in is a high volatility no man's land where the bears and the bulls battle it out for supremacy. As you can see with all the massive swings here, and here. So while we are in it, I'd buckle up till we inevitably break out to the upside. It's not if, my friends, it's when. Although zoomed out Bitcoin seems to go up in a straight line, when you're on the front lines like you and I, we witness these swings in real time. Dips will come and dips will go, but inevitably the most pristine digital asset in humanity's history flushes out the weak hands, and next thing you know, number go up and up and up. Would you look at that, my friends? The sun's up. It's another beautiful day here on planet Earth. A day none of us are guaranteed. Yeah, we're lucky enough to have it anyway, so get out there and knock 'em dead. And remember, we're playing the same game as our psychopathic elected leads. That's right, it's the long game. So zoom out and have a fantastic day. And we'll be going live right away, so grab yourself a coffee. Join me for a quick one, and by all means, sing it with me now. I'll run the banks of boom to spang. Bitcoin, crypto, morning tea. Hey, whoa. Cha-cha-cha-ching. An epic dump of 7%. It seems like a wild dump, doesn't it? Especially when you wake up to it. I know I was, when I went to bed, it was basically at 69K. We had that bullish engulfing candle take us right back up. So the dump was down the memory hole, and then whoa, woke up to that red candle. Wasn't that something? And in the big scheme of things, obviously a 7% dip is nothing. It's really just a mood swing, you know, a trick knee, a bruised chin on the face of the Bitcoin market. But these days, that's about as big as they're getting. So everything's relative. When we want the dump, or when we don't want the dump, we expect something like a 30% dump, and we don't get it. We get a 7% dump. We're still terrified. We're still shocked and in awe, and basically think the bull run's over. But it's just a 7% dip. It's really nothing. I saw this this tweet. I think it was like buy the dip and then ... with what effing money. And it's true. I mean, if you've been buying the dip, it's almost like the last chance to DCA before the rocket actually takes off. Because imagine if you're buying every dip, just boom, then boom, you're up. Then it dips, boom, and you're up. And it dips, boom, and you're up. It's that compounding action of the DCA on the dips. Would be good. I haven't. I put that package in back in, I think, September. That was my goal for this bull run. However, I'm looking, and maybe I might get lucky. I might get lucky before the halving, or just after the halving. Maybe we'll see another colossal dip. For me, 7%. I mean, that can correct in a day. That's not a big deal. It seems like it can't. You know, when we're at the bottom of this glorious red candle, it seems like we can't recover from it, but we might. Are we going to lose 65K? Maybe. Who knows? It's not the biggest deal. There's the, this is where the bear flag plays out to. Of course, in the edit, I put bull flag, and I had to go and grab bear from another part in the video and stick it in, so it has that weird. I don't know if you noticed it, but so this cute little bear flag comes out of nowhere. Let's put that in 60. What was it? 62.6, something like that. 62.5, 62.6. That's what it is. We'll put that there just in case, you know, it hits there. And so there are some bearish correlations on these charts. I'm not going to lie. I don't like them. I don't like them when I see them because, you know, if we go back here and when I discuss this, if we get another lower low, we might come down to this 67 and take off. And so we consolidated a lot longer than I thought we would. And boom, we came down. We closed the candle right at 67.4. And then continued down, wouldn't you know? So this support, I mean, she should hold. What is the support? 60. Let's call it 64K. 64K. If she's so darn tootin' and she keeps going, 64K should be a natural bounce. However, would I be surprised to see a little wick down to the 62.6? It could all happen in 4 to 8 hours. It could happen. 62.6. I mean, what is this wick? This wick is 60K, and it was March 24th. So what is that? It's less than 2 weeks ago. Less than 2 weeks ago, we were at 60K. So in the big scheme of things, you can't really see it here on the 4-hour chart because she's a noisy little so-and-so. There's just so much going on here. But if we check out on the ding-dong here, you can see how this is just, let's move it out of here. This is the range of high volatility, no man's land. Look at these swings. Whoosh, whoosh. Then we go up, break it, whoosh, 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 whoosh. Then we come up, and now we're doing it again. So look how bizarre this is. We come right down to the 38.2% fib, which is, again, right in the crux. It's bullish, Pete. Right in the crux of this old, I got rid of this triangle of neutrality. I didn't think we'd need it. I had to put her in again to make the video. And so the 62.6 you can see right here, hopefully. It's a triple word score. It's not just a double word score. I didn't catch this for some reason in when I was producing the video. But this is where the bear flag, I was about to say bull flag again, on the 4-hour chart, the noisy little so-and-so plays out too. And it's the 50% fib on the ding-dong. And Lord love a duck, it's... Oh shit, I'm moving it. I thought, wouldn't it be nice to have a little cursor like that? I could actually use this. There we go. It's actually the 50 moving average too. So we got the 50 moving average meeting the 50% fib. It's not the craziest thing to happen. We're not used to it, so we have grown a little accustomed to dips being bought up before you can even say the word dip, before you can even say the word carnage, before you can even say the 2 words bloodbath. It just seems to get bought up. But could we say an extended dip? Yeah, I guess. I don't know. To me, there's a theory in my mind that, of course, when it comes to these giant hedge funds, the BlackRocks, the Vanguards, the Citadels, you name them, they're all buddies to a certain degree. They all know what they're doing. They all have high-level meetings of their forecasting. It's not like they're all acting in secret from one another. So it leads me to believe that Grayscale, there might be something going on there that's backdoored into this whole scheme. Like it's really a mechanism of exchange so far, because they're just selling into these massive hedge funds. So is it planned? I don't know. Would it surprise any of you if it was a planned demolition of Grayscale into the new ETFs? That wouldn't be crazy. In fact, it would make a lot of sense, wouldn't it? Instead of buying it on the market, which would drive the price up. So this is where it gets cloudy for me. With the OTC selling and the OTC buying. If it was me, if I was a whale and I were to buy Bitcoin, I wouldn't want to buy it OTC. I would want to buy it on the exchange and drive the price up so it's instantly in the green. But maybe that's why I'm not a whale, and maybe there's something the whales know that I don't, and I probably won't. What is a whale? 10,000 Bitcoin? 1,000 to 10,000? Something like that. Whatever it is. I didn't get that position in this bull run. In fact, in order to get that now, this is where the risky biznatch comes in, is that in order to really exponentially put your Bitcoins, go from, let's say, 1 to 10 or 10 to 20 or 20 to 50, you really have to be selling in the green and buying in the red. Now, what freaks me out about that is that I just don't trust this version of the bull run. I just don't think we're going to see those retracements. And if this initial aspect of the bull run is any indication of what may happen, I mean, we haven't seen massive dips. So historically, if you were to sell in the green and see a 30% dip, that was a very comfortable and successful way to increase your Bitcoin exposure. And if what was in the last bull run we saw, was it 10 times? 10 times it did that? 10 times it did that. Here, what was the last one? We've seen a 20% kickback. That was the biggest. Now, if you were relying on historical fractals and you sold, luckily at the top, I mean, no one's that good, and it got to 20%, well, you'd still be thinking, it's got 10% more to go till I get back in. And then, wouldn't you know, it goes right back up, and you missed it. You blew it. And you can, the thing about trading is that you can make 10 genius trades in a row. And that next one, that 11, it can take you under. You make one small mistake, right? So imagine all this time, all this patience into this bear market, getting a position together, saving your money, putting your fiat currency into USDC or waiting on the sidelines. Then you finally get your position, and then you think, you know what? I think I might be smarter than the market right now. I really feel like I'm smarter than the market. I'm going to sell now, and I'm going to buy back in 30%. Well, we haven't seen one of those. So until that comes, I think a lot of people are getting wrecked with that scenario. Plus, you can tell in this ding dong, in this daily chart, this is just the range. It's just the range. I mean, it's not that exciting too. 61 to it's a $10,000 range, and we've been basically bing bong bing ping pong bing up and down. So the bottom of this range is 61K below 61.4. I mean, we've been there. We've been there last week sometime. What was this, the last Wednesday? And then the Tuesday before that, we were basically at our support. So we've basically hit it twice. Could we hit it a third time? That's not crazy. That's not crazy. Now, if we zoom out even more, looks like we're about to lose 65. This is an interesting candle for the Wookiee. Let's move this out so we can see it a little better. Now, this is what I don't like, is this little doodle I made way back here. What week was it? This was the first week of March 4th. I thought that, you know, my free throw analogy where we peter out at the top and the ball goes down and it usually lands on a Fibonacci. Well, if we break this resist with support, which we are currently breaking now at 65.3, Well, look at this. This is look at Johnny. He's like, where's the volume? Where's the volume here? We just kind of went up and up and up. Where's the volume? So this is a 54.4 swing. That's the support. But let's see, where's that? Is that the 78.6? Yeah, it is. That's 56. Where's the goldenest of golden ratios? It's at 59.2. Can you imagine that? Well, look at this. This is what I don't like either. 59.2, 61.8% Fibonacci. And look, that which once wicked will get candlesticked. Damn it. Those pesky little brats. Can you see how 61.8% Fib plays out at 59.3 with those wicks getting candlesticked? Wouldn't be the craziest. Now, this is not what I do not want to see, this retracement back. But again, it's not the craziest. So let's remember that 59.3 candlestick wick, 68.1% Fib. There's a lot of numbers coming at you at once, but let's just break it down. Goldenest of golden ratios, the wick. I mean, no one really applies that indicator except for this community because we know how accurate those pesky little brats are. That which once wicked will get candlesticked. I don't know. What is it? I can't remember what is this called? This trader. I can't believe Trade Rev. What am I talking about here? The trading platform, TradingView, for Christ's sakes. They should have the pianomattyb children's choir indicator just as a joke, but it would make sense. And so that's the weekly. Now, let's go to the monthly. Remember those numbers. And so yesterday on around the blockchain, we are up here. If you can see where that little dotted line, that's where the price was, right? And so the DZ was asking, where do you see the price going based on? And so this is we have a 7-month run here, a 7th month run. Now before the high school miles back in 2012, where it was all mayhem. You can't really apply any of those things to to these modern day. I think we had over 7, or maybe there was 7. Anyway, this TradingView doesn't even go back that far. So it's nonsense to me. But in the last, we go back here, this was 6, right? You can't see that. This was 6. We broke the record. Now we're at 7. So if I was a gambling man, which I have been and still am on many levels, I would say that we are kind of due for a red candle, or else we're now in 8 monthly candles in a row. So remember those numbers, the 61.8% Fib of 59.3. Well, this is 59.3, and it's at this wick of last month's candle. And it's just under the 23.6% Fib, which is 60.5. So this is where I have this is where I see this red candle going down to. It would make sense to ping C sharp. That's where my mind goes on that. Ping C sharp. I've been playing C sharp a lot. Maybe that's why. I would put this candle coming down to the 23.6% Fib pinging, and before we end up going out again. That would make sense to me. Would it not make sense to you? And now when you see this chart, this is nothing. I mean, if this was a 4-hour chart, a retracement back to the 23.6 would happen in 5 to 10 minutes, right? So we're on a monthly chart. Things move slowly on the monthly chart, but here it is. Would that surprise anyone? 60.8, what are we at? We just broke 65. We're in the 64s. It's still not that bad. It's still not that bad. 64s. I think Scotty Mo's like, I can't wait to get out of these ziggities. Me too. It's not like I enjoy saying 64, 65, 65, 65, 65, 65. You can see how as an auctioneer though. 65, it has that little 65, 65, 65, 65. That's why they say it. That's why I say it. It's weird. Sometimes I do say it. Sometimes I don't. JP, was that C sharp or D flat? It's always C sharp in my books. It's always C sharp and it's always E flat. It's never D sharp for me, or it's never G flat. That's out of my pay grade. C sharp is always C sharp for me. Never D flat. It would be weird if I was playing with someone, they're like, it's in D flat. I'm like, C sharp? That's what I'd say anyway. Yes, it all XRP A11Y it all ends up back at these pesky little kids' wicks. So there is that. It's almost triple word score for some of these bearish confirmations. But here's the thing. What happened? That's I think Chris Avila. That's my son's school. Avila. 20%. Let's see what a 20% on a monthly looks like. Just from the candles, not the wicks. Who cares about the wicks? 20%. 56.8. It's nothing. We did 30%ers last time. 30%ers we did last time. Now, the thing that would be juicy for me at this point, which goes back to, am I a gambling man? Yes, I have been and I am, is the position now that I'm kind of growing in the USDC. Hey buddy, would I put it into Bitcoin at 50 or would I put it into some alts? That's the question. That's the question. You know, at this point in the game, that's the question I'd ask myself. All right, buddy. Well, we had an epic dump of 7%. Do you consider that a huge bearish indicator, Duke, or is that just a knee-jerk emotional response? Boom, we'll get back, whatever. What do you think? Knee-jerk response, boom, back, whatever. Yeah, I agree. Well, let's do some shout-outs, my boy. Are you ready? Can you hit that little green button there and some sweet reverb? Oh, there you go. Hold on. Let's turn this piano on, you little dickens. You ready? The backup kid.
The backup kid.
Squeaky McGee.
Squeaky McGee.
And our good buddy Misco.
Misco.
Dave Digital, the goat.
Dave Digital, the goat.
XRP A11Y.
XRP A11Y.
Wick.
Wick.
Sneaky Pete Vaporizers.
Sneaky Pete Vaporizers.
Jimmy Coco.
Jimmy Coco.
JP.
JP.
Captain Swanky Pants.
Captain Swanky Pants.
Das Peach.
Das Peach.
Randy a Bite.
Randy a Bite.
Doug Yoder.
Doug Yoder.
Curtis Neal.
Curtis Neal.
And Jen Friesen, stage manager at the Jimmy. All right, Duck.
We're playing the same game as our psychopaths to collect our leads. That's right, it's so long game. To zoom out and have a fantastic day. Around the banks of boom, spank, Bitcoin, crypto, morning tea.
Nice note, buddy. Nice note. Raise your sharp pitch, my boy. Congratulations on that fantastic pitch he's gone. Thank you very much for tuning in, everyone. Let's see where this carnage goes. Where can it go to 62.6? Yeah, sure. Go. That's some sweet reverb. I don't know if you can hear it. I can hear it in these inners. Thank you very much for the likes. Thank you for sharing the video for that one person. Not that one person that's on the fence. Remember, 2 days ago, orange pilled 3 people right in front of me. I didn't have to do much, actually. I was just talking. I was blabbing. And they were just like, oh, I'm going to get on the exchange. Oh, I'm going to buy some Bitcoin. Oh, well. That's the way it happens. It happens that fast. Take care, everybody. Have a great day. Make sure you like and subscribe and share this video.